Happy Friday, traders. It's Julian here from J. Lewis Trading, just doing a market recap. There were a few things that I was looking at, a few trades that I put on, but I really want to focus on this specific Twitter play that I had on today. Now, you can see right through here in the top right-hand corner, Twitter closed down over 15% to the downside. Twitter did not have a good day. The street was not happy with Twitter, not happy with some of the things that they were saying in their quarterly reports, and Twitter got hammered for it. Now, what I want to do is I want to look at technical levels and where Twitter came down to. You can see this level right through here at 56, key level of previous resistance, now acting as support, but it's actually cut right through there. So that's very interesting. I'm going to get into exactly what I did here on this trade. I do want to take you back just a few weeks, and you might have heard me talk about this either in Ask a Trader or in one of the swing trade reports that I put out, that we were actually looking at Twitter for a potential swing trade, breaking out of trendline resistance and rallying up into this prior resistance level. It's exactly what it did, and then it came off that level, and it was anticipating some poor news for earnings. And you can see, you fast forward a couple weeks, boom, today gap down. Now let me take you into the 2-minute chart. I'm going to show you exactly what we're doing here and the levels that we're managing and monitoring. So the first thing that we've got to pay attention to here is the big gap down. And you can see that price action floated down to that key $56 prior resistance, now support. So that's one thing we got to look at. The second thing is we got to look at the I guess that might be confusing, the top portion of the gap down, as in this candle up through here. Price action comes back down to that 56 support level, bounces up, holds that this level right through here at 57.71, and that is my cue to start shorting this. I got in this general area earlier on in the morning. I did watch this thing all day, and it was towards the end of the session, and I was literally out of this thing just before the bell rang, and I was liquidating in this area right through here and took this position off. Now, this is a pure technical play. The fortunate thing for this stock was it was volatile on a Friday options expiration day. This thing sold off. The options that I bought were obviously puts, which gives me exposure to the downside. I bought my puts up in this level for about 49 cents, and when I let them go, I was letting them go about $1.41, $1.42. I think there's about 180% return on this intraday dump on Twitter, and this was a trade that I really liked. There were a couple other stocks that I put on, same setup, same strategy, but they bounced and rallied. I am going to be doing a full review on those stocks, but I really wanted to focus on this Twitter play and just how volatile options can be if you're on the right side of the trade. Now, this is generally a very standard setup that I trade short, but it just so happens that this was a larger stock, big tech play, and again, it came on a Friday, options expiration day, and this thing got absolutely hammered, down 15% on the underlier, and the derivatives that were being traded appreciated about 182%, I want to say, from 49 cents up to $1.41, $1.42 into the close. If you have any questions about this trade, by all means, please reach out. If you're watching this on YouTube, don't forget to like this video, subscribe to this video, and if there's anything that you actually want me to create by the way of reviews, content, alerts, etc., please drop me a message. I'm at julian@jlewistrading.com, or just leave a comment in the comment box below if you're watching this on YouTube. Hope some of that's helped. Have a great weekend.